Welcome to the Deep Dive, the intelligence shortcut we've designed for you. Today, we're jumping right into the third quarter 2025 results for Rigetti Computing, that's ticker RGTI. They're one of the most interesting pure play companies in the quantum space, and our goal here is simple. Filter out the noise from the earnings call and give you the essential intelligence you need to know.
It's a great one to cover because this sector is just so high stakes. Quantum computing, it operates on these two completely different timelines.
Right.
There's the messy, immediate reality of trying to actually sell something, and then there's this incredible exponential progress on the technology itself. And this quarter, Rigetti really showed us the tension between those two.
Okay, so let's start with that immediate read, because the numbers, they presented a classic dilemma. On one hand, you had the bottom line. It was actually a pretty clean beat. Non-GAAP earnings per share came in at a loss of just 3 cents.
And the street was expecting a 4-cent loss. So from an operational standpoint, they're managing costs better than anticipated.
But, and this is a big but, the market completely ignored that and focused on the top line.
It punished the top line. Revenue landed at $1.95 million, which was a pretty significant miss from the consensus, which was closer to $2.2 million. And maybe more importantly, that's an 18% decline year over year.
And the reaction was immediate. The stock closed down over 5% after the announcement. We saw a lot of volume and I think significantly a lot of put-leaning activity in the options market.
That put activity tells you the whole story, really. The market is signaling its worry, and it's all about that revenue decline. For a company like this, a speculative growth name, you don't get rewarded for saving a penny on EPS.
No.
You get rewarded for proving you can grow the top line. The whole investment thesis lives and dies on commercial traction, and this quarter, that traction looked like it was going backwards.
So let's dig deeper into those financials, because the revenue miss, that wasn't the only, let's say, challenging number on the P&L. Gross margin just collapsed. It fell from 51% last year all the way down to 21%. That is a huge drop.
It is, but to their credit, management was pretty direct about why. They said it was almost entirely due to a change in revenue mix.
Okay, what does that mean in practice?
It means they're taking on low-margin contracts to get a foothold. They specifically called out the systems sale to the UK National Quantum Computing Center. Essentially, they made a strategic trade.
So they're sacrificing profit now for a big institutional reference customer later.
Precisely. In this phase of the industry, getting a complex system installed and running for a major government client is, you could argue, more valuable than a few extra points of margin. It proves the product is real.
Right, but it still leads to some ugly numbers in the short term. The operating loss was $20.5 million.
Yeah, and that's up from last year, mostly driven by R&D, stock-based compensation, and some salary increases. It's the cost of keeping the talent.
But the thing that really defines their security, the thing that lets them burn cash like this, is the balance sheet. They have a ton of cash.
The cash cushion is their #1 competitive advantage. They ended the quarter with almost $559 million. But here's an interesting detail.
Do what?
After the quarter ended, they had about $46.5 million in public warrant exercises come in. So their cash position as of early November was actually closer to $600 million.
And why is that nuance so important?
Because it shows that while they have a multi-year runway, a big chunk of that recent cash didn't come from sales. It came from financial engineering from past deals. It just reinforces that market pressure to show real organic product market fit.
Well, speaking of product market fit, they did announce some new wins. 2 new purchase orders for their 9-qubit Novera systems totaling about $5.7 million.
And these are major sales. It's a signal they're diversifying away from just U.S. government R&D projects. And we're talking full complex systems here, the dilution fridge, the control systems, everything, not just the quantum chip.
We also got some detail on who the customers are. One is an Asian tech manufacturing company. The other is a California-based AI startup that's going to use it for error correction research.
And that customer profile is so key for you to watch. The Asian manufacturer shows they have global reach. The AI startup, that shows the early signs of that hybrid quantum AI market that management is always talking about.
Now, here's the catch, and it ties right back to that revenue lumpiness we talked about, the delivery timeline.
Correct. The revenue for these systems won't be recognized until the first half of 2026, so it doesn't help the numbers for Q4 of this year, which just adds to that volatility. But they are upgradable systems, so there's a path to future revenue there.
And before we move on, we should also mention the Air Force Research Lab contract. That's a 3-year, $5.8 million deal.
Right. And that revenue is valuable because it's predictable, it's recognized ratably, so spread out evenly over 12 quarters. It's a nice steady stream to help offset those big, lumpy system sales.
Okay, so despite all that near-term noise on revenue, the real bull case, the real investment thesis here is in the lab. Let's pivot to the technology roadmap. Management said they have strong momentum here, and they're focused on a huge milestone that's just weeks away. By the end of this year, 2025, they're on track to deliver a 100-plus qubit system with a median two-qubit gate fidelity of 99.5%.
Hitting that 99.5% would be a massive technical validation, but they're already looking past that. The roadmap targets a 150-plus qubit system at 99.7% fidelity in 2026. And then the big one, a 1,000-plus qubit system at 99.8% fidelity by the end of 2027.
So 1,000 qubits at 99.8% fidelity. They also mentioned a 60 nanosecond gate speed. Why is that speed detail important?
Speed is everything. The faster your gates, the less time the system has for decoherence, which is the noise that destroys a quantum calculation to creep in. It's a sign of better control and stability.
Oh, okay. So let's say they hit that 99.8% target in 2027. Does that mean they've finally achieved what the industry calls quantum advantage?
Not quite. And this is where the nuance is so important. 99.8% is absolutely world-class. But that last little bit, that 0.2%, is the difference between an academic experiment and a real-world calculation where errors compound.
So what's the real threshold?
The company believes true quantum advantage requires 99.9% fidelity plus some form of active error correction.
And when do they think they can get there?
Their timeline for that full fault-tolerant quantum computing is somewhere between 2027 and 2029. So they're getting close on the raw fidelity, but they know they still need to integrate the error mitigation part.
And their whole strategy to get to 1,000 qubits relies on this chiplet architecture, scaling up from 9-qubit tiles to 36-qubit chiplets.
Yeah, and they seem very confident in that approach. But we should probably introduce a counterpoint here.
Go ahead.
Doesn't scaling with a bunch of little chiplets make the problem of long-range coupling connecting qubits that are far apart even harder? In fact, DARPA's feedback to them mentioned this very issue.
They did address that. They basically argued that maintaining fidelity is hard whether your system is one big chip or a bunch of small ones, and they believe the manufacturing benefits of small, high-yield chiplets are worth the trade-off. It's a calculated bet.
It is. Now, looking outside their own lab, there are some key collaborations that are really pushing their vision forward.
The integration with NVIDIA's NVQLink seems huge, basically connecting their quantum processors directly to AI supercomputers.
It's critical. The real money isn't in a standalone quantum computer. It's in a quantum accelerator for a classical supercomputer. This is how you tackle those hybrid problems, like drug discovery or financial modeling.
And then there's the work with AFRL and QPAX, which is tackling a really fundamental physics problem.
It is. They're trying to solve the problem of converting the microwave signals that control their qubits into optical photons that can travel over fiber. If you solve that, you unlock distributed quantum computing, a true quantum network.
Okay, moving over to the government pipeline, the signals there were a bit mixed.
They were. First, Rigetti wasn't selected for the next phase, Phase B, of a big DARPA initiative. And the feedback they got was focused squarely on the need for better plans around error correction and that long-range coupling problem we just discussed.
And what about the National Quantum Initiative? That funding dried up before, which hurt their revenue.
Well, it got reauthorized, which is good news, but it was a bit of a disappointment. The final amount was $625 million over 5 years.
Which sounds like a lot.
It is, but earlier drafts of the bill were talking about as much as $2.5 billion. So this just signals that you can't rely on a massive government spending surge. You have to go out and make commercial sales.
Let's talk about that bigger picture then, manufacturing scale, because management dropped a pretty big warning about future spending.
They did. Wow. They said their current 150-millimeter fab is fine to get them through the 2027 roadmap. But to go beyond 1,000 qubits, to push fidelity closer to that 99.9% magic number, they'll need to upgrade to 200 or even 300-millimeter tools.
And that's where that $600 million cash cushion starts to look a little different. What's the cost for a new fab?
Hundreds of millions of dollars. Now, for context, a normal chip fab for your phone costs over $20 billion, so it's much less. But it's still a massive chunk of their current cash. They basically said a decision on how to fund that will be needed in the next year or so.
So To sum up their strategy, they're confident in the tech roadmap, and the cash gives them a lot of flexibility.
Absolutely. That $600 million isn't just for R&D. It's dry powder for potential M&A. They could buy a company that accelerates part of their roadmap, like in control systems or specialized cabling. They're not just building, they're positioning themselves to buy.
Okay, this is where it gets really interesting for you, our audience. All this data creates some serious volatility, and with that comes opportunity. So it is time for our segment. This is not financial advice. This is purely for educational and entertainment purposes based on our analysis of the market dynamics. Please do not make any investment decisions based on what we're about to say.
All right, so you have this massive volatility in the stock. It's at a nearly 2,000% one-year return. You have this huge cash balance. The valuation reflects total cynicism about near-term revenue, but at the same time, this wild optimism about the technology.
So there's this big gap between the technical execution and the revenue recognition. What's the outrageous but plausible idea here?
We're calling it the catalyst capture wager.
Yeah.
And it's a two-part trade. Part one, you short the stock through the end of this year, 2025.
Okay. Why?
You're betting on continued market frustration with the lumpy revenue in Q4. And you're betting on the classic year-end tax loss selling that you always see in these speculative stocks.
So you ride that wave of pessimism into the new year, then what happened?
Then in Q1 2026, you flip. You get aggressively long. This long position is a direct bet on two huge catalysts converging right around the same time.
Catalyst number one must be the tech milestone.
Exactly. Catalyst one is the successful achievement of that year-end 2025 milestone, the 100-plus qubit system at 99.5% fidelity. They hit that, and it's concrete proof that their tech roadmap is real.
And the second catalyst has to be the commercial proof the market's been waiting for.
Yes. Catalyst number two is the revenue recognition from those $5.7 million in Novera orders finally hitting the income statement in the first half of 2026. If that cash comes in, it's the first real, tangible proof of product market fit outside of government R&D.
That's a fascinating trade. Banking on short-term fear, followed by a 1-2 punch of good news, both technical and commercial, in the new year. So let's wrap this up. What's the final takeaway from our deep dive into Rigetti? It seems like this quarter really highlighted a core divergence.
It did.
You have strong, measurable execution on the technology roadmap, backed up by that huge cash cushion. But at the same time, you have this ongoing volatility and, frankly, acute skepticism about their near-term revenue and margins.
At the end of the day, the one metric to watch right now is that year-end 2025 fidelity milestone. If they hit 99.5% fidelity, that provides the technical validation the market needs to justify the long-term story, regardless of how lumpy the revenue is for another quarter or two.
And it leaves you with a big strategic question to think about. How much is that $600 million in R&D execution worth when the real question is who pays for the next 10 years of quantum development? Is that cash enough for a new fab, or will they need the government to step in to push them past that 1,000 qubit mark? That's really the billion-dollar question.